All right, we're back. Tasty Crypto Show. My name is Ryan Grace, and with me today, we have a special treat for you, my friends. Greg Magadini, Director of Derivatives at Amberdata, CFA, options trader, crypto markets expert. Greg, we've known each other for a couple of years. I think this is the first time that you've been on Tasty Live. Hopefully, it will not be the last. We'd love to have you back. We've got an action-packed show, but before we get started, how you doing?
Doing great. It's great to see you again, Ryan. I'm really excited to be here. I mean, there's so much to talk about, so much happening in the crypto markets, vol markets in general, but crypto specifically is going to be an interesting corner of the world, I think, going forward.
Yes, we've got Bitcoin back above 90. It's a good day. There's some green on the screen. A lot to talk about, like you said. But Greg, for anybody that's not familiar with you, can you give everybody just a little bit of your background? You've been trading options. You've been in the crypto space for a very, very long time. I think you're well known at this point. But yeah, for anybody that's not familiar with you, maybe just give us a little bit of your background. What got you into options trading, into crypto, and what prompted you to start Genesis Volatility, which has since been acquired by Amberdata?
Yeah, absolutely. Well, I'd love to kind of briefly talk about my background. So I've been trading since 2008 during the financial crisis. That's really when I sort of first got introduced to the markets. Then did a degree in accounting and economics and all that good stuff. And then went to prop trading after school out in Chicago. So worked at Chopper Trading in Chicago and DRW as well. And then in late 2015, I discovered crypto and really started following the space and started trading the crypto space. And in January 2020, having traded options for quite a few years, I discovered Deribit, which was sort of was and is the main options trading venue for crypto, Bitcoin options and ETH options and crypto vol in general. And I built a lot of tools that I was used to using in sort of the traditional trading world for crypto in Excel VBA, things like that. And then later created a company called Genesis Volatility to really do all the analysis around the volatility surface, kind of trade data, realized vol, what's going on, how's the skew shaping up, things like that. And then sold that to Amberdata in October 2022. And now I run the derivatives data business here at Amberdata.
When you look at the crypto space, does a lot of it translate from traditional markets, traditional derivatives trading, in terms of the tools that you're building, the data that you're looking at, or is there anything that you kind of had to adjust to in crypto?
Yeah, the way I like to think about it is that a lot of the trades that maybe worked back in the old days, like very easy edge trades that are kind of no longer there in the efficient markets, or unless the markets are going crazy, we're kind of there in crypto. So here's some basic strategies that existed in crypto. When Bitcoin was rallying really, really hard, say, Q4 2020, the vol skew got so bid to the call side that you could put on a caller and have a built-in like 1 to 3 risk reward. The call was so expensive, the put was relatively cheap. You could buy the underlying, and now you kind of have this built-in, very favorable profile. So that was kind of interesting. That was a little bit different than what we're normally used to in TradFi. Another trade that kind of came up a lot and still comes up, and I think will be interesting to monitor going forward, is just a simple basis trade. You buy spot Bitcoin, you sell the future against it, you collect that spread. That thing gets pretty nuts in very bull markets, and in bear markets, completely flips inverse and becomes negative. And there's kind of interesting dynamics there for the options market, because in the crypto vol space traditionally, before we got IBIT options, everything was a future option. And so that basis compression or expansion actually is extra volatility in the underlying, especially because it was positively correlated to the spot price. So as spot rallies, the basis expands, so the future rallies a little bit more. And so there's a little bit more vol. And if markets crash, you kind of get this compression / inversion, and that's a little bit more vol. So there's these types of opportunities that are really interesting to monitor.
And when you're in the space today, I mean, where are you primarily participating? Is it now more so in some of the liquid ETF options like IBIT? Is it on exchanges like Deribit? where kind of are you at? And then I guess, what strategies are you deploying? Is it a lot of the same as what you saw before, where there's still a lot of edge in some of these trades that maybe don't exist in the same way in TradFi? Kind of how do you approach the markets?
Yeah, so that's a great question. So some of the edge trades that I just talked about, those are kind of like nice, unique, high probability, not quite arbitrages, but pretty close to statistical arbitrages, you could say. Those are nice, interesting opportunities, but they're kind of not always present. Right now, I mean, as simple as it sounds, I think there's kind of an interesting market, and I'll probably show some charts here in a little bit, going on in terms of just IBIT implied volatility, or Bitcoin implied volatility compared to the rest of the macro landscape is quite interesting. We have gold basically at near all-time highs implied vol. If we look at GBZ to gold VIX, we could look at VIX itself, which is in the 30 handle. We can look at BXTLT, which is essentially the bond VIX. That's really high as well. It's come off a little bit, but it's still relatively in the upper 80 percentile, 90 percentile in terms of all readings. And crypto vol is kind of historically at the lower range, and it's kind of an interesting dynamic. I think there's, in terms of just building a position, if you're a long coiner, you can actually kind of do a swap for the call options and essentially have all the upside exposure and implicitly limit your downside. And Bitcoin's kind of figuring out how it trades. Today, it traded like a risk asset. Yesterday, it traded like a risk asset. Gold was breaking and Bitcoin was rallying, but there's a great argument to be made that maybe Bitcoin is the digital gold, and if it starts trading like that, well, we have gold that was testing 3,500 as recently as 2 days ago, with near 30 vol in the GBZ. That's kind of an interesting dynamic, and I wouldn't completely underestimate the potential for a huge right tail in the Bitcoin space. And the vol market's pretty cheap for that upside convexity right now. So that's kind of a classic position. It's not necessarily an inefficiency, but it's one of those corners of the world that I don't think everyone's paid attention to yet.
Yeah, a couple of things I want to unpack there. I guess starting with just the discrepancy that we've seen, as you mentioned. So you got vol explodes to basically COVID highs. I mean, maybe flirting with great financial crisis levels. VIX up at 60 or so. I mean, I'm trying to think of the last time that was. There was that moment in time, the Japanese the yen carry trade unwind back in August, but levels that we really haven't seen since COVID. And so when you see that on your screen, you're thinking, okay, this is the end. I mean, Twitter is talking about the end of markets, the end of free trade, the end of the dollar, you name it. And Bitcoin volatility isn't really doing much. I mean, it went up a little bit. Obviously, there was some selling pressure, and you see correlations go to 1 in some case. But what do you make of the fact that you didn't exactly see this violent response in we'll call it Bitcoin vol or across crypto markets and other areas there, whether it's ETH vol or others, but you saw just such a response in traditional assets? What do you make of that?
Yeah, there's a couple of thoughts that I have there. One of them is, I think scarier than the red headlines that we had a couple of weeks ago in terms of global trade wars. So to me, that's a subjective opinion, but it seems like maybe the market was caught flat-footed on a few things, and there's just kind of a scramble to buy insurance, and therefore you get sort of a huge jump in the VIX, and the VVIX just goes nuts. So maybe it's part of the situation. But then we had this new dynamic. So in my mind, that's sort of the equity vol side of things. But then we had this new dynamic for bond vol and gold vol and risk parity trades that was very different. So U.S. stocks go down, U.S. bonds go down at the same time. That kind of blows up that sort of risk parity trade where they offset each other. So that's not good. Then you have bond vol going really, really high, like near all-time highs, because we're starting to flirt with the idea that maybe sort of the international world is not going to keep financing our deficits. Maybe the U.S. dollar reserve currency is not as a slam dunk as people have thought. Maybe those things are coming into question. So that kind of affects the bond vol. And then gold markets sort of back up that narrative because not only do you have spot gold making new all-time highs consistently. I mean, about a year ago or something, it was about $2,000, and now we're at $3,500. That's a big jump for gold, something that has typically a vol of 15. And so gold spot not only rallies to all-time highs, but gold vol also rallies near sort of that upper percentile, 90th percentile, whatever it is. So that kind of backs up that narrative. And then to your point, Bitcoin didn't move at all, and Bitcoin vol was pretty low. And so I think that's really where that opportunity exists, because if the dynamic is really U.S. dollar reserve status is maybe under threat, or maybe that paradigm is going to shift, that could mean nothing for crypto, or it could be that moment that you get a mega jump in Bitcoin as the foreign investors or central banks decide, hey, maybe this crypto thing is a nice neutral non-liability asset, just like gold, and starts to mimic digital gold.
Do you think we're starting to see some signs of that today where, I mean, arguably you have a bit of a decoupling over the last couple of days? I mean, I get that equities were up a bit here earlier. Bitcoin's back above 90. But is this front running in any way what comes next, whether that's liquidity injections or it's on the policy front? I mean, do you think you see equities follow Bitcoin here in any way? Is this being driven by something else? What are you seeing in the market right now?
Yeah, so in my mind right now, Bitcoin is still following equities.
Okay.
I think the investor base is still sort of the same people. It's maybe, for lack of a better term, maybe the Wall Street bets crowd. Those are kind of the first movers in sort of the crypto space, I would say. And so I think we're still in the same sort of pool of investors. And so I think Bitcoin's still trading as a risk asset. But there's a caveat there, and that caveat is one thing that's for sure trading as a risk asset are altcoins. And what we're seeing in Bitcoin is a growing Bitcoin dominance. And to me, that translates to a little bit of a difference on how Bitcoin trades versus, say, Ethereum, versus, say, Solana, versus, say, Pepe, or any other meme coin out there. And so we're starting to see a little bit of Bitcoin trade as digital gold, but it's not completely in that camp yet. And so I think the moment where things can really change is if you have a serious player, say, the Bank of Japan or something, decide to allocate some serious capital to digital gold as a reserve asset. I think not only do we jump higher, but I think it starts shifting how Bitcoin trades, and it doesn't become just a risk asset anymore. It kind of trades as its own thing, completely uncorrelated to everything else, and it becomes a tail hedge to the US dollar.
So how do you personally position for that, or is that something that you are trading currently? And if you want to throw up any of the data points that you follow through the Amberdata dashboard, please do. But yeah, how do you think about that in terms of, okay, there could be a very big opportunity on the right tail, and then maybe at times too, when everyone's on one side of the boat, you look at opportunities on the left side of that. But how are you positioned right now? What are you looking at that kind of gives you some insight into kind of where those trade opportunities are?
Yeah, absolutely. I'd love to share some charts right now, actually, if that's possible. So the first chart I want to show here, I'm not sure if you guys can see this.
Yes, we got you up on the screen here. Perfect.
So this first chart here is the IBIT term structure. So one of the things that's really interesting about the IBIT term structure is we could see, A, it's in contango, makes sense, given that the Bitcoin volatility has been relatively low to its peers. But B, you could see all the way out to 2 years, you got 55 vol is kind of where Bitcoin's at. Now, we'll contextualize that very shortly, but one thing I do want to point out is until we got IBIT options, we did not have long-dated maturities like that. The longest dated maturity on Bitcoin was 1 year out on Deribit, and now you have nearly 3 years out on the IBIT options. So I think that's kind of a nice opportunity for people to trade this. And Ryan, to your point, there is still the downside crash risk, the left tail risk, especially if Bitcoin is currently still trading as a risk asset. And if we get any sort of sustained bear market in equities, I do think there's a potential for the left tail side of the risk as well, which is why the call option strategy is so interesting. So let me just jump to this next chart. So this is 6 month at the money vol going back to April 2019. So this is, we have a really deep history of Deribit options data. And one of the things I want to point out here is look how elevated it's been before. So if we look at essentially COVID, we look at Q4 breakout rally all-time highs, Q4 2020, excuse me, and then we had a big sell-off later in May 2021. 6 month vol in Bitcoin can hit 120, and that's 6 month is a long dated option. There's a lot of vega there. It's not like a weekly option or a zero DTE. This is real vega, and it's a big move. So we've seen 6 month vol jump from 60 to 120 at least 4 times in the past. And today, if we look at where the vol is at around 55, that looks historically at the lower end of the range to me. One thing that's important to keep in mind, and this can explain part of this, is that as the market matures, as crypto vol trades more and more, there's more people on the other side who have the capability to sell vol, especially with IBIT options now that people who have a traditional market making business in TradFi can start taking the other side of these trades in Bitcoin. So there's a good structural argument for lower vol as the asset matures. That being said, I do think vol at these levels, given where the rest of TradFi is, doesn't seem unreasonable as a long.
I mean, arguably, it's pretty cheap, right? Relative to that scenario you've described where, sure, it might be an edge case, but I think personally you will see sovereigns, you will see central banks possibly in this space. It's maybe not tomorrow, but in the same way that there are allocations to gold and that asset plays a role in the system, I think as this matures, there's a role for Bitcoin, and it's not priced in.
Exactly. Yep. If you are a believer, like I think the both of us are, the upside call, the upside convexity seems rather cheap. If it never happens, then hindsight 2020, I guess it was expensive, but I kind of like having sort of that paper on just in case, so to speak.
Now, how do you structure that trade for everybody that's following along at home? Let's assume that you're going to use longer dated IBIT options. Is this something where you're looking at buying call spreads, doing some sort of ratio, you're doing a calendar? Like, how do you think about the trade structure?
So that's a great question. So normally I trade a lot of call spreads and 1x2s. Those are some of my favorite structures. The thing here is very simple. I just want outright calls. And the reason why I want that is because I think the vol is really cheap. And so even though with a call spread, you still have positive, you still have positive vega, you still have vol exposure, you're not going to get that explosive panic upside from a big announcement such as Central Bank, Bank of Japan, buying Bitcoin, and then you get a $40,000 move in one day. I think that potential exists, and I want that exposure. It's one of those things, people are very tempted. We've heard all the horror stories. Tom has explained some of them as well, where some people decide to sell the tails because it's sort of the most expensive point on the vol curve. But once in a while, the 1987 crash happens and all those people lose everything. Well, I think that 1987 crash to the upside for Bitcoin, there's that potential out there. And so I think just owning sort of those tails is actually kind of interesting, especially if vol isn't crazy right here.
Yeah, I mean, that makes total sense to me. This is something where I would feel a lot more comfortable selling volatility on the downside, selling puts in IBIT, for example, versus selling really any sort of upside exposure. I think the only case I would do that is if I own the underlying itself, or I have the spot position to sell those calls against. But yeah, just given what we've seen historically, and correct me if I'm wrong here, but most of what I've observed is that you have a positive correlation between volatility and price here, whereas typically you observe an inverse relationship in, let's say, the S&P 500. VIX goes up, S&P is probably going down a lot. This thing seems to move more to the upside when it moves. It's more violent, more volatile on the upside.
Yep, exactly. And that's sort of the spot vol dynamics that we've been seeing in gold recently. And so if gold is a proxy for digital gold, then yes, spot vol dynamics should be positive. And so sort of that freak out, oh, can I get my hands on this stuff? Because we could think of it as a Bitcoin call, but there's also sort of the other side of, if the move is being led by US dollar weakness, in a way, it's kind of a dollar put. And so there's that panic somewhere. And I think as spot goes up, vol goes up is in that scenario is true. We've had situations such as the FTX bankruptcy, which has negative spot vol correlation. So Bitcoin can trade both ways. But I think the scenario that we're talking about right now, especially with sort of a weakness in the US dollar, is positive spot vol.
Yeah, and I think the other thing that people often miss here with this asset, especially as you come from, or as a lot of investors do come from the traditional space, people miss that, well, yes, this is a scarce asset. It's a hard asset, 21 million Bitcoin. People understand that. What I think that they miss, though, is that this is extremely illiquid on the upside, right? It goes up, there are no sellers. It's the opposite of what you might encounter elsewhere, where we're seeing downside volatility and there's no bid. There's no sellers at times, right? And we can track this on chain and we can see that not much of it has moved at various points in time. But I think that's a key thing to be aware of. And that's why I really like the trade idea here and what you're calling out in terms of that upside risk, that right tail, and how to position for it. There's so much more that I want to ask you, Greg, but I knew going into this that we were going to run out of time, and 25, 30 minutes wasn't going to be enough. So I'd hope to have you back on in the future. But before we jump off here, I think you've kind of called out what I always love to ask. Okay, what's your bold prediction for the year or over whatever the next couple of years, just into the future? And I think you've kind of hinted at that already in terms of a central bank buying Bitcoin or a chase into this by everybody, given kind of the macro dynamics. But anything else that you want to highlight? Any other bold predictions or any advice for anyone that's new to trading options in crypto or just getting into crypto to begin with?
Yeah, absolutely. I think one of the things in terms of advice, one of the things I learned over my career is trade your portfolio like you're trading for the rest of your career. So every trade that you find is going to be like enticing, but remember, like, what you're trying to do is trade for the long term, because that's how wealth really compounds. Big trades that make a lot of money, we've all seen it. That money comes and it goes. So I think that's something to keep in mind in terms of advice. And then in terms of sort of trading ideas and bold predictions, I spoke a lot about the Bank of Japan, but I think, when we look at the end of the sort of fiat debt supercycle, that is the most indebted nation in the world, which is Japan at nearly 250% debt to GDP. And so their fiat currency is an interesting market to pay attention to, which is the dollar yen pair. And they are one of the biggest US Treasury holders. So if we're looking at this dynamic of sort of a global shift in how things work, the biggest U.S. Treasury buyer is also the most indebted in the world. Keep an eye on the dollar yen, because I think that's going to be the canary in the coal mine.
Okay. Awesome. Well, we'll keep that in mind. Before we wrap things up, where can everybody find you? I was actually trying to find your Twitter handle. I don't know if you are personally on Twitter, but if you are, where can people find you, or where can they get a hold of you? Check out Amberdata. I think the dashboard you can now access. Just have to sign up. So that is very cool, in my opinion. But yeah, where can everybody find you?
Yeah, absolutely. So I don't have a personal Twitter. We are at Genesis Vol in terms of the derivatives portion of the business. If you want to check out all of these dashboards and look at all the data, you can do so for absolutely free. Just go to pro.amberdata.io. You can sign up and then check out all the charts and look at Deribit, traditional finance, OKEX, Derive, some of the other venues. You can look at the futures markets as well as the options markets.
Awesome. Well, dude, thank you again for coming on. It's good to see you. Appreciate you joining the show here today and hope to have you on again in the future.
Thanks a lot, Ryan. Appreciate being here.
Absolutely. That's going to do it for our show. I will be back next Monday. Until then, I'm Ryan. Peace.